The 7th of August, Making Tax Digital deadline, does it apply to you? With the first quarter of the 2026-27 tax year having just wrapped up on the 5th of July, Making Tax Digital, MTD, for income tax is no longer a looming future concern, it is actively here. For thousands of UK sole traders and landlords, the clock is ticking toward the very first mandatory digital deadline on the 7th of August 2026. What is Making Tax Digital for income tax? MTD for income tax is HMRC's initiative to modernize how self-employed individuals and landlords report their financial data. Instead of filing a single annual self-assessment tax return, you must now adapt to a three-part digital workflow. Keep digital records of your self-employment and UK property income and expenses using MTD-compatible software. Submit quarterly updates, summaries of your income and expenses, to HMRC directly through that software. Submit your annual final declaration using software that draws from your ongoing digital records. According to official statements, Making Tax Digital is designed to make life easier for taxpayers through automated digital tools and more streamlined ongoing processes. However, some skeptical observers argue that the real purpose is the enhanced ability to detect financial inconsistencies. The requirement for regular quarterly updates makes it significantly harder to submit fabricated or retroactively adjusted figures. HMRC can easily cross-check data across submissions and more efficiently identify taxpayers who overstate expenses or understate their true income. The threshold trap, summarizing multiple income streams. A common misconception is that the MTD threshold applies to each business or property portfolio individually. In reality, HMRC calculates your qualifying income by adding together the gross income, your total turnover or gross rents before any expenses are deducted, from all of your self-employed trades and property interests combined. If that summarized total crosses the threshold, MTD applies to all of your eligible income streams, even if every single one of them is relatively small on its own. Example, how income summarizes. Consider Alex, who runs a small freelance consulting business and rents out a single inherited property. Consulting turnover, gross, £35,000. Rental income, gross, £20,000. Combined qualifying income, £55,000. Even though neither individual income stream hits the £50,000 mark, Alex's summarized qualifying income is £55,000. This pushes Alex into the very first phase of MTD. Alex must now keep digital records and submit separate quarterly updates for both the consulting business and the rental property to avoid non-compliance penalties. Another hidden surprise for many taxpayers is exactly when HMRC measures your income to force you into the regime. You do not qualify for MTD based on a self-declaration of your current state of affairs, nor do you look at your immediate last year of trading. Instead, HMRC applies the strict current year -2 rule. This means your mandation into MTD for the current 2026-27 tax year is entirely judged on the gross income you declared on your historic 2024-25 tax return, the one submitted by the 31st of January 2026. This creates a significant trap for shifting businesses. Even if your operations downsized dramatically over the last year, or your rental income has plummeted well below the threshold currently, you are still legally mandated to comply with MTD rules right now because of what you earned 2 years ago. Once you are pulled into the system, a sudden drop in income does not grant an automatic exit. You are required to remain within MTD until your qualifying income stays below the threshold for 3 consecutive tax years, or you cease trading entirely. Who is exempt? While the vast majority of people crossing the thresholds must comply, HMRC does grant exemptions for individuals who are genuinely digitally excluded. You may qualify for an exemption if you cannot reasonably use digital tools due to age, illness, or disability. Living in a remote location with no reliable internet access. Religious beliefs that prohibit the use of electronic devices for this purpose. If you don't fit into those specific exempt categories and your first quarter has just closed, now is the time to ensure your bookkeeping software is fully set up, connected to HMRC, and actively recording your day-to-day transactions. This article provides general guidance only and reflects HMRC guidance as of July 2026. It is not personalized tax advice. The correct application of Making Tax Digital rules depends on your specific circumstances, business structure and facts. We recommend that you obtain advice tailored to your individual situation before taking any action. Please contact us to discuss how these requirements may affect you.